All right, guys, welcome to the first module in risk management, the most important thing of trading because you want to manage your risk. You don't like losing money, you don't like your hard earned money just going down the drain, especially more than you would like it to. So, risk management is needed, especially what I'm about to teach you guys in the upcoming modules and the instructions that I'm going to be having. You guys are going to learn how to make money quick. I'm somebody that skips the fluff and not even skip the fluff. I was just taught in a way where I learned ASAP how to read charts instead of digest a whole bunch of information. I go right into, okay, for example, if you're a beginner, you want to see how to make money, you want to know how to make money, and you want to know how. Like, how do I do it? How do you do it? Like, what do I need to do to see a profit, or what do I need to do to see, oh, I lost, but I can get better? That is what I'm focused on, and everything else that you need to learn, you will learn. But sometimes I feel like you don't need to learn as much as what is just portrayed. Like we do know what we need to do, and everything else is kind of irrelevant until needed to be relevant. But we're aware of that, so we're gonna still be learning. You know. So I'm excited, but as you can see on the screen, we're gonna be talking about what it is, how to utilize it, and then I'm gonna give advice to my beginner self. So, like I said, risk management is something that you do to protect your capital. You know what I mean? Risk management can consist of a stop loss. You can write this stuff down. A stop loss, I'll write it down to a stop loss, right? Um, Proper lot sizes, which I'll get to, and percentage, I'd say, or percentage. So right there, let's just run with that. Stop loss, right, is one way that you can um, help your capital stay at a certain amount that you're okay with, right? Give this example real quick. So we have the long position tool right here. Long position is located right over here. So the red is if you are, so wherever you stop this tool is where you want to, how do I say it, get out the trade right there. So that could be, that's called our stop loss. The price, 124.557 is our stop loss price. So if the price was to work its way down, boom, and it went past this price, then it will take me out the trade. So that's a stop loss, right? And once you calculate, aka go into proper lot sizes, you calculate your lot size. The app called Steenu, I wrote that in the description. But Steenu is an app that I use. There's free apps. This one's paid, like 14 a month, 12, 13, 14 a month. But there's free ones, but I just personally like this Steenu. All you have to do is put in the amount that you have in your trading balance or that you want to calculate. You put how much percentage you want to risk. So 1 to 5% is a great amount. So let's put it right here under percentage. 1 to 3%. Actually, 1 to 5%. So yeah, 1% to 5%. 5% is like, okay, you're more comfortable, you're more advanced to what you're doing. But 1 to 3% is what I started off with. Did not go past 3%, and I'm super glad I did because I have a foundation now of risk management. So now I can take it up a notch. Where now I'm able to risk 10% or more percent because I know how, and I know how to mentally handle numbers when it's a higher percentage. You don't know yet, and this is why you need to stay in the 1 to 3%. But 1 to 5 is like max. But 1 to 3%, I'm actually gonna change because you guys don't even need to go up to the 5. But 1 to 3 is what I was in to basically understand that yeah, this is how you protect your capital, knowing what's coming in and what's coming out of this trade. So yeah, Stenu, after you put your stop loss into Stenu, let's go back to this. So account balance, percentage you want to risk. So let's say 3%. And then right here, the last number is the stop loss. So if we go right here, the 172, it will be the stop loss. If I go up higher, you can see a change. So that's a 57 pip stop loss. So you'll put that in there, and then you will calculate your lot size, which is the position. Once you have your phone app, or for example, I'll show you right here on Sway charts what I'm talking about. So right here is the lot size area, right? This is my funded account right here. But you can change the lot size, and that determines how much money you're risking. So you have to calculate it, because it's that's the format and that's the calculations when you trade is and it's similar to like a football field and like the yards and the unit of measurement. So trading and calculating pips and price and the movement of price and converting it into dollar signs is calculated as a lot size. And so that's why I said there's lot size calculators to calculate, like I showed you, the account balance, your percentage, and your lot size or your stop loss, and it calculates into a certain number. You put that certain number in here, and you will be aware of how much you're risking per trade and how much you're going to be gaining per trade. So yeah, that's that right there. How to utilize it. So literally what I was just saying, how to know how much is coming out of your like or not your bank account, your trading account when you're trading is everything. And if you don't know how much you're going to be losing on that trade and how much you're looking to gain on the trade, then you're gambling, right? If you don't already know in your head how much money that you're risking and then how much you're going to gain, you're gambling. That's what I was told, and I still agree. Until you get to a certain level, you kind of get more free realmed, because you understand a certain amount that you're willing to lose, and you just get like more accepting to lose because you know your skill is up there to really gain. So, but that's at a higher level, more skill and experience. But in the beginning, definitely I was knowing exactly how much was going to be lost and how much was going to be gained. So I'm going to teach you guys how to utilize that live in effect, I guess. Let's do this on the phone, right? You can follow along with other ones. This is something I used early, but then I was introduced to Stenu, and I haven't looked back since. So here's my effects book right here. I might put this on the description, or you can type up myfxbook.com, right? You put your currency pair. So if I'm trading gold, XAU, USD, put that there, account currency. I'm in the US dollars. You guys do your currency. Account size, we can put $1,000, say. Risk, you can do it in percentage wise, like number wise, 3%, 1%, or you can swap that with money and do like, oh, I only want to risk $100, but if you want to do it in percentage wise, 1 to 3%, let's do 3. Stop loss, let's do 20, a 20 pip stop loss. Let's calculate. So right here, lots, toggle between lots and unit. 1 lot equals 100,000 units. So that's the one thing that tripped me up, was trying to figure out this setting right here and really just not getting 0.1, 0.01. So maybe that 0.15. 15 times 20. Interesting. That is correct. That's correct right there. So that's the one that I'll be using for Forex and things like that, which is the 0.15 lot. And I was just doing some math, like 0.15 times 20, which is the stop loss. Because you got to think, in this one picture, I will add in the description. Actually, let me find that right now. This picture changed my life. Ooh, I found it. Y'all are in luck. Y'all are in luck. Wow. This picture changed my life. Yeah, it changed my life in trading sense. My journey elevated after having this picture because, in other terms, the lot size right here, it's more explained. It's explained deeper when you have a certain amount of lot size. Every pip or every movement that you see on the charts, which you'll get into, whatever lot size you have, that's how much money per pip. So if it's a 20 pip move with a certain lot size, you can see how much you're going to make in number amount. So this is just a really helpful guide and tool that I used over the time. Like, I just really quickly understood what a lot size was and what the importance was, and like I just need to make sure I calculate it right so that I can have my proper risk amount in my app. So that's why Stinu has been a forever favorite. And when you think in abundance, it's like, okay, this is worth what, $14 a month or something, but it's like what I'm gonna be making is gonna be paying for this. Like, this is mandatory, you know what I mean, until you start learning on your own, you know. But yeah, I use it. So this is a free one, and you've seen other ones, but I definitely use this one. That was number 1 and 2, how to utilize risk management and what is risk management. Hope you guys got a lot of insight, and let me know if you guys need any more questions or answers. Just ask me any questions, I'll answer it for you. And yeah, there's gonna be a lot more with risk management in the live calls, the live trading sessions. So, and I'm gonna be upping up more and more content when needed. So this is just the start, but I hope you guys are getting a lot of gems already, and I'll see you in the number 3, my advice to my beginner self. All right, guys, another thing that I forgot in terms of right here, risk management and how to utilize it. So one thing to that kind of helped a lot in my journey was this tool right here that we have right here, is understanding it. So right here, as you can see, risk slash reward ratio 2.89, and if you see here, it changes every time I increase and decrease the profit side of things, and then also this side of things as well. And this is when I'm losing the trade or things like that. So let's put this an example so you can see how risk management is utilized on a daily basis. The same way I think about this on a daily basis. So if you guys start learning how to think like this as well, then you guys will be well off and really good. So let's go to USD JPY currently, and I'm on the 5 minute right here. I'm just trying to get like some entry that I would get in, or just show an example. So right here, I see a certain pattern that you guys will learn in the future modules. It's called an institutional candle. So yeah, put this long position because I'm going to go in with a buy, because that's what it's doing. Yeah, without thinking too much. So I'm gonna put the short position on the dotted line. As you can see, I'm on the 2 minute. So it's just a lot more reactive, but then you guys can also see more information But I suggest you guys stay away from the long. I don't even say stay away, but yes, I do say stay away because I learned in multi-time frame analysis, the next module will be really important to learn more on this topic that I'm gonna say. But I got to 2 minute and stuff like that. But before that, it was the 4 hour, the daily, you know, the easier looking ones, the easier looking candles. They're not moving that much. They're moving, but not that. It's just a lot more simple on the higher time frames. There's a lot more noise on the lower time frames. So yeah, a lot more price too on the lower time frame. So let's go right here. Let's just go where we were. It's clearly going up even more. But let's say our stop loss, we wanted it right below this little line or this area, which is the institutional candle. So let's say I wanted to put my stop loss behind this institutional candle. As you can see, this number right here is 5.7. So because we're trading USD JPY, the price is a little different. So the unit of measurements are calculated a little different, but it's still called pips, and you're still catching price basically. So that's 5.7 pips, and so rounded up to 6, right? And then on the other side, as you can see, we're at 1.4. It says 1.4. Now it's 2 pips. And as you can see, that risk to reward ratio number is changing as well. And it's strictly based on your entry. Even if your entry is different, everything's switching. That risk to reward is switching because this pip, this number right here changes, which is the amount of pips that you are catching or moving or calculating. So basically all this is saying is if you entered right here and the dotted line basically comes up to this area right here, then you would be currently making 1.2 times what you're risking. So if you had $60, or if you had, let's even start with $20. If you put up $20 on this trade, then you would be making 20 and some change. You'll make probably like 22 or something like that. 2 would be 40. Yeah, it'd be like 22, 23, 24 or something. 25, something around there, you know what I mean? 1 point, you know what I mean? So, and right now what it's currently at is 0.66 times what you risk. So all it is basically is a 1-to-1 is you're now making the amount of money that you put up to or you're risking, because it's different, not put up, because we're not gambling, we're not putting $20. We're not like, imagine poker or like these gambling games. You have to have cash, right? You put $20. This is in gambling, not trading. Trading is different, just so you guys can understand the verbiage and the terminology. So with gambling, right, you have cash, or poker, like chips and stuff. You exchange it, right, to get some stuff back. With trading, if, let's go back to the charts now. If the dotted line was to come all the way down to this red area, the stop loss, and go through it, right, then I would have lost $20 if I took my trade out as exactly at where this price level is compared to this tool right here. Then I would lose $20. So in between all this area before my stop loss, which I calculated before getting in this trade, I would be on the verge of losing $20. So I can close it out even before that. I could lose $10, $5, $2, $1. You know what I mean? So it's calculated. This is not no game. This is calculation, like prediction, calculating, strategic, strategy. But just people don't know this though. They think it's gambling, and it's okay. But I'm here to educate as well. So as you can see, it's getting closer to this area right here, which is a 1-to-1. So like I said, if you're risking $1,000, then this is like $700 right here. But then there's a thing called potential and like liquidity and things like that, and market structure that, if you understand it, is going up higher, then as you can see, if I stopped it right there, you see that risk to reward goes to 4.34, right? And if we go back to the 2 minute, all it has to do is reach up there. So it's just how long is it gonna take? You know what I mean? So yeah, that's a 4.34 risk to reward ratio, and that's 25 pips. And you can see a change if you want 2 times the amount of money that you risk. So if you risk $1,000, you'll be making $2,000 right there. And the best thing is also this tool right here, the info line. So it's up here. You go to the arrow, you can favorite it right there. But say you entered in on this candlestick right here, this blue one right here, if you're looking at it, and I click it, and I put it to this blue candle, right? And then I'm gonna come back down here to see. So this is another tool that I love, and it has been a game changer for me. So if I put my entry right here at this time, and then I close my entry before it started selling, and I closed it up here, I would have made 0.76 times what I risked, which I'm still up. I just didn't make a one to one, but I still made money. So like I said, $1,000. Say I put $1,000 on the line, or put for the trade. That's $760 around that, and it took 8 minutes. As you can see, at this, the tool is called an info line, and it basically shows you how many candlesticks or how many bars is the duration of start to finish that you put. I put this candle to this candle, so that's 4 bars, and that's 8 minutes because we're on the 2 minute time frame up here. So 2, 4, 6, wait, this one right here, yeah, 2, 4, 6, 8. All right, so it took 8 minutes to, it would have took 8 minutes to make $760, period. You know what I mean? So that's trading, and yeah, that's how you can calculate your risk and see how much you're gonna make before you're even putting in a trade. So it's called a setup at this point, because you're like setting up to put a position in. You're gonna know how much money you're gonna have in. You're gonna have an idea of where it's gonna go or where it's not gonna go, and even if it doesn't go your way, you have a certain amount that you have in your brain that you're gonna lose. So it's like you're okay with that. So that helps you while you're during the trade, like stick to your trade and not like let your emotions get to you, because if you see in the description, 95 in the mindset mastery, I say 95% is mental and 5% is learning how to trade. And what I mean by that is literally once you know how to trade, that's all you have to keep doing. And I'm teaching you guys the only thing that I've been doing my whole journey, just a simplified version, because you're not learning exactly the way I'm learning it. And I feel like I'm a great teacher and dumbing stuff down. So it's going to be simplified for sure. So yeah, all you have to do is learn this strategy that I'm teaching, and then you have to master the mindset part of it, because it's a lifestyle, you know, so it has to fit in your lifestyle. Let's see how good you are with being okay when you're making a mistake. And when I mean make a mistake, that also is like how your mindset and attitude is, but also literally your attitude on how much money you lost and how you recover and bounce back. A lot of people get in their feelings. What if you don't have that money to get back? What are you gonna do to make that money back? Like stuff like that makes or breaks traders. And so you got to be strong. You have to be strong. You have to know why you're doing it, and you have to just see something in trading. A lot of traders already see, and that's all it takes for them to realize what's on the other side of all this pain that they're feeling. You know what I mean? So that's the biggest thing that I want you guys to feel. But yeah, till the next module, I'm out.